Hello everyone, welcome to Smart Investing. I'm Albert, host of the channel like always, and this is going to be about the banking services sector. I'm going to be doing 10 stocks. They're not in a particular order, they're just random. So let's begin. I'm going to be using the Webull. I'm going to start from the bottom all the way to the top. Again, I'm not going to waste too much time. I know I talk a lot in some of my videos, but I'm not going to do that this time around. I just want to give quick, relative, accurate information. So let's begin. I'm going to start out with IX. Company is called Orix. So I'm going to be doing a little bit of technical analysis, just something very, very basic, and mostly fundamentals. So let's start off with this stock. Hold on, let me get my... You guys can give me a second. Sorry about that. Getting out my pen. Getting out my drawing pen. So, we have IX Orix at $92.64. The volume looks pretty low for a banking stock. Earnings look pretty good. Oh, sorry. Forward earnings, they're expected to grow this year. Then I can kind of see why, because they're earning pretty fast and pretty high, and supposedly they're relatively cheap, and the dividend is pretty good actually. This is definitely a good company from what I'm seeing fundamentally. The numbers look good. Even the 52-week high and low, this is definitely a company you want to add. Again, I can't give a share price, but again, this seems like a really solid company. Let's look at the dividends. I know people love to look at dividends. So, okay, weird thing is, I'm supposed to be doing banking services sector, but for some reason this came out as consumer lending. I apologize that this wasn't the primary sector. I thought this was the primary sector. Um, it has it as a secondary sector, but again, I apologize because I thought this company was actually the main sector. I thought the main sector for this company was banking services. And again, they're still similar in sector and industry, so they do kind of relate to each other. But to be very specific, this is not really a banking sector. They do just strictly lending. So this is a Japanese company, yet they still pay American money, which is, the US dollars. I would have thought it would have been the Japanese yen, but I guess not. So this is an ADR, which is a American Depository Receipt Company. Basically, ADRs are companies overseas, foreign companies. Basically, these are foreign companies. Anytime it says ADRs. So let's look at the dividend. They pay $1.66, but for some reason, hold on. Apologize. So the dividend says here 3.67, but then when I actually click on it, it's showing 1.6. So I don't know what to believe. Unless that was a 2021 estimate. this one. But then for 2022, it might pay this one for 2022. So I'm unsure of how much the dividend is being paid out. Once again, if these numbers are not lining up, that means this is wrong too, the dividend yield. So again, this is pretty inaccurate, and I don't like inaccuracies. So let's just move on from this. Let's look at the chart. So we have here. Excuse me. It's been a long day. So I had the 5-year. We have the 1-year looking pretty strong. The last 3 months have been down. The last month has been even worse. Past 5 days has been okay. So from week to week, they look like they're doing okay. Maybe the next week or two. But after that, for short term, longer than a month, quarterly, it looks like it's doing pretty bad. And again, I apologize for this number. Let's read a little bit about the company before I move on to the next one. So it says, again, a Japanese company, diversified financial services, has 6 business segments. So they do automobile leasing business, car rental business, which is pretty popular, and I could truly understand that in the Japanese market. I actually have a Japanese car, and the funny thing is too, now that I mean that'll be later on, probably in further videos, but that's a good question. If people are still purchasing foreign cars, I have a foreign car, and it's actually a Japanese car, so I drive a Nissan. So in a way, are people still buying, uh, foreign cars, or have you ever even purchased or thought about having an American-owned vehicle? Again, to each their own. The reason I don't like American vehicles, they're way too expensive, and honestly, for the most part, it sucks to say because I'm American, and I'm sure some Americans do that too. It's too expensive. The quality's not there, and the service is not quite there as well too. Everything's a money game, especially for cars. When you go to dealerships, they just nickel and dime you. So a lot of these creditors, they just want a fast payment. So next up, CVLY. So again, IX, definitely a good company, but it's just not part of the banking services sector. So next up is CVLY. Really low volume. I would have to see how it is when the stock market is open. I apologize. I keep yawning. I'm getting kind of tired. And I think that what it is the time change. Time change is just throwing me off. So I don't have nothing for forward earnings. The volume is 4,000. So the last year, let's see what that looks like. Oh, it's pretty flat. So this stock ain't too bad. This stock doesn't look too bad for the year. Or I'd say quarterly. I'd rather see how it is quarterly. I can't really say for the year because anything could happen. But they do pay a dividend. Let's look at that. Oh, wow. So they have paid special dividends. They have paid special dividends, this company, in 2021. a couple of dividends actually. They paid 3 special dividends. So we see here in 2016 of 2020, they cut the dividend in third quarter and beyond, and they're starting to come right back to paying 2 years later. They're starting to come back to pay the original amount, the same amount. So for this time frame from 2020 all the way till now, that's like a 2 year time frame. So basically, you would have to wait 2 years for your dividend rates to come back to normal. But let's see if the special dividend actually makes up for that. Who knows? It doesn't show the number, but I'm sure, even though they paid 3 times, I'm sure it was still a nice amount. So looking at the numbers for this company, they seem decent. They seem okay. Again, something very, very short term, nothing for long term. This will have to be a quarter by quarter basis because the markets have been ugly, all 3 major indexes. So if we look at the last 3 months, it still looks pretty decent. So let's start from the beginning here. So this right here fills in, that fills in, and that fills in. So for the most part, it looks like it's had some nice uptrend, which is good. I mean, it's not much. If we look at the dollar amount, so we're looking at around just a $2 move within the last 3 months. So I don't know, something to watch list. Not something to really get into. So next up, BMTC. BMTC for the last year has been up and down. Looks kind of flat. I like the volume. I like the range for the 52-week high and low. Nice. So we have decent earnings. We have dividend 1.12. Now let's see if that actually matches up. Does that match? So rising dividends, that's good. Any splits? Last split was in 2003. What sector to make sure? So they are a bank. Let's read a little bit about them. Wealth management. Okay, nice. I'm just reading. I skimmed through it, so they seem pretty well diversified in the lending aspect, which is good. But then also, it doesn't hurt to collect some fees from your customers as long as they have, good services for your customers, because that ultimately drives sales. So I'm reading the bottom. So across Montgomery, Chester, Delaware. I don't know what state those cities are in. So Delaware's in the northeast, so is Pennsylvania. So I'm guessing a lot of these stocks. I see New Jersey in there. So northeast section, seems like people are spending still pretty plentiful in the northeast section of the U.S. So we have, again, BMTC. I'm going to go back to the chart. So let's see the 3 month. It's not bad. Not bad. Holding up against other people. It's not bad. I'm going to say watch list. And again, they have been paying a rising dividend. Next up, BMO Bank of Montreal. So we have nice volume, earnings really good, dividends really good. I'd definitely add this one. Definitely can weather the storm. You see here, it's been going up, flat there, then it broke out. It's gotten down slightly, as you can see, but it then picked up right there, and then it just looks kind of flat. So for the most part, it's filled in from here, from there, and from there. So we have 3 points touching. We have the first point, the second point, and we have, like, if you want to call this the third point, you could call that. So believe it or not, BMO is still holding up strong, even though it's a down market globally. So we're gonna look at the dividend. I'm sure they're paying rising dividends. This is definitely a company you want to own. So again, I'd say this is a buy rating, strong buy. Again, I can't give you a price point. That would have to be determined at a later time. This month is the only time it's actually like slowly going down, sort of a downtrend, but nothing crazy. So I'd give it time till it drops a little bit. We're gonna look at the 1 month so far. So we're talking about around $111 for a better price for the month. Now we're talking about the last 3 months. The lowest was at around 101, and I'm being generous. Yeah, about 101 and change. So yeah, let's just start off with the last month. So we're looking at about, like I said, about 111. So yeah, there you have it. BMO, definitely you want to add this. Definitely a strong stock to buy. So moving on to the next one, FCFS, Firstcash Holdings. And again, Bank of Montreal, Canadian bank, and they did pay in Canadian dollars. So, Firstcash Holdings Inc. This is a company that does consumer lending. Again, I apologize, this is not a banking services sector stock. So, when this is in the wrong sector, that means I'm going to have to review this company again, but at a later time because it's in a different sector. But again, I don't mind going over the stock now because later on prices might change and things might change with this stock. So it is what it is. I'm going to continue evaluating it. So let's just look at the numbers. Numbers at first look, they look pretty good. Like the volume. Definitely you want to add this to your list. We have, okay, no, the last split was in 2006. That's not bad. Somewhat far away. So then we have rising dividends as well. Not bad. Not as good as Bank of Montreal, but still pretty decent. And let's look at something else. 52-week high and low. That's a nice range, close to 60 bucks. Well, sorry, I said 60, but I meant 40. I apologize. So, again, this stock is in the consumer lending, like I said, but it will have to go into another video later on when I do this again. So again, I'm gonna evaluate this company later on. So again, it looks like a good company. I'd say yes to it. Hold on, let me look at the chart real quick again. It's on a downtrend, so I'd give it some time. I'd give it some time before it goes down or up, and wait for confirmation to really see what's gonna happen. I mean, the move might be late, but at a time like this, these are strong trends. So I have here the next company up, CALB, California Bancorp Inc. I'm gonna look at the 1 year. It's still on a strong uptrend. So we have decent 52-week high and low, decent range, low volume. Nice stock, but not a lot of people are interested in this stock as of right now. Maybe it looks like it might sell off. Might be a trap. Can't really tell yet. But it looks like it's holding up, so I'll give them that. So now it does not pay a dividend, which in a way is not too bad if they don't pay a dividend because they can grow the company. So they are in the banking sector as their first priority for the preferences in the sectors or industry or industries. So again, this stock ain't too bad, but I'm gonna say no. No watch this on nothing because it's just not popular as of right now. There's not a lot of volume or anything. But I could be wrong. Like I said, the stock has been holding up good for the year in the last 3 months, but who knows? I'd give it more time to adjust and see if there's any more breakouts for that. So hopefully this can still hold up and do some slow momentums going upward. So for now, no, and hopefully later on this company does better. So next up I have is SMMF, Summit Financial Group. That's very low volume. Numbers, I like what I see. Now let's look at the analysis. Looks pretty flat there. So I'd wait for more of a dip on this stock. We have here rising dividends, as you can see. Yep, rising dividends. And that's it. So next up that I have for the list is CWBC. We have very low volume. This stock has been holding its own. I'm going to say hold. Don't sell or buy. You just want to wait for some confirmation and then jump right in. This is definitely decent stock. Now, let me make sure they are in the banking sector and the banking services. Okay, so they are. So, CWBC Community West Bank shares. Let me look at the dividends. Slowly raising, not bad. Considering a very low price, a little above over $13. So, Community West Bank shares, they are in what region? It says here, but I don't know what state that is. Goleta, Oxnard, Paso Robles, Santa Barbara, Cali, but whatever else they have would be listed, but doesn't say. I guess they're just in California. Who knows? I don't know. I guess they're just a California bank. So next up that I have is, actually I didn't look at the chart. It was pretty flat, which is not too bad. And for the 3 month, had an uptrend, went flat, well, slowly went down, but it just looks flat to me ever since this date here. Just looks flat. So who knows? Hopefully they catch momentum and they can do better. Next up, after CWBC, I have two more companies. So short bank shares. SHBI is the ticker symbol. Volume is at 72K. Not bad. I like what I see. I know people love cheap stocks, so I'm here to provide that for you. We have here an uptrend for the Webull. So now let me see if they have rising dividends. Not really. The last time they did a raise was in 2019, so that's kind of a long wait. That's about 3 years. So, oh well, they lost out. We have the split ratio in 2006, 342. So now, let's look at the numbers again. It looks okay. It looks okay. So, next up that I have is hold on one sec, you guys. Apologize. Okay. Thought it was kind of slow or something. Hold on. So SHBI. So since 2019, okay. Yeah, that's too long of a time. I mean, if people don't care too much about the raises, um, that you're just losing out on some potential. That's all. Just even if it's like, let's say 50 shares, all that money adds up. It might not be a lot, but hey, you know, to me, every little bit counts, you know, especially when you want to hold on to good companies. So the last one that I have here is AUBN. So volume, oh, I do not like the volume. Awful. Not a lot of buying or selling. I'd stay out of this one. I'd say definite no. This one's a definite no. I don't even want to look at it because I see how horrible the volume is. And we have here another company giving out 1 cent raises. At least they're giving something, right? So shouldn't be complaining. But again, the point is, this low of a number for the volume, then that makes you question who's actually buying or selling if those numbers are really low. It just doesn't look appealing. So we have, let's see, they are paying raises every year, which is good. Better than nothing. So AUBN, like I said, slowly doing the dividend increases. The numbers again, they're okay. Hopefully they can do better. So the last year they've been on a downtrend. Wow, that's a long downtrend. Can't even imagine. So the last 3 months, pretty flat. Last month looks pretty down and flat. So slowly but surely it's going down. So that's all I have for you. I don't want to take too much of your time, guys. Thanks for watching. Like, subscribe, comment, or share. I'm always available. Some feedback would be nice. If not, then thanks for watching anyway. I will see you guys in the next one. Let me just double check I have all the companies. So I did this 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. Thank you guys. Have a good night. And I will see you this week in the next one.